Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
You're going to hear about two airline stocks that are worth paying attention to in this segment. Our research director, Shiraz Mian, and our momentum strategist, Dave Bartosiak, who's joining us on Skype, are going to fill in the blanks for us. Hey, Dave, we're going to start with you. You've got an interesting airline here, SkyWest.
Yeah, SkyWest, ticker SKYW. They are a Zacks rank #1 strong buy right now. And you touched on the strength in this airline industry. Right now, it's the top 4% of our Zacks industry rank. So it's not just SkyWest that's experiencing positive earnings revisions to the upside from analysts. It's a whole lot of stocks in the same industry. So when you have a strong stock within a strong industry, that's a pretty good recipe for success. Now, they're coming off a really big earnings beat with EPS coming in at $1.28 versus expectations calling for just $1.09. And that $1.28 right now represents year-over-year EPS growth of 58%. So real solid. And how did they do it? Over the course of the last year, what they've been doing is modernizing their fleet and adding new planes. So over the course of the last 12 months, they've added 44 planes to their fleet. Now, that's sort of the the underlying sort of fundamental story. But what I want to show you here is the chart, but more specifically, the price consensus and EPS surprise chart that we have on Zacks.com. So I'm just going to pull this up for us real quick. Here you can see, let me get my little Skype out of the way. The black line represents the price, which corresponds to the right y-axis. The green arrows are earnings beats. The longer the arrow, the bigger the beat. And then this one red arrow all the way down here in 2014, that was the last time they missed on earnings. These multicolored lines represent the evolution of our Zacks consensus estimates over time. So here's really where you see the power of the Zacks rank. Because when these estimates are moving to the upside, the stock has no choice but to follow along with it. So the stock really, typically over time, all stocks do this, where they track along with earnings over time. But look over the course of the last several months, even though these earnings estimates have stayed elevated, not just for 2018, but also for 2019, the stock price has come down a little bit, despite not even missing on any of these earnings reports. So that sort of divergence that you see between the price and where the earnings estimates are presents a real opportunity for to get in on this stock at a value, because now it's not trading at the same multiple that it did 6-9 months ago, but these estimates have stayed high. So when you get that combination, it's usually a pretty good scenario for buying into a stock. So that's why I like SkyWest here.
All right, thanks. Shiraz, you have another airline, Boeing.
Yes, so Boeing isn't really an airline, but an airline would be its main customer base.
Manufacturer.
That's right. So about 2/3 of Boeing's total revenue, earnings, cash flows are tied to the health and demand from the commercial aviation market. Mm-hmm. The other 1/3 is the aerospace defense part of it, which is primarily the U.S. government defense budget. So the overall outlook on the civilian commercial aviation side, passenger demand from China, India, the rest of emerging markets, including the developed world, U.S. and Europe, has been very strong, and even more conservative estimates of that market suggest that this demand will continue growing for the next many, many years. So Boeing typically gets presented as this very trade-exposed name, in the same league as Caterpillar and some of the others. Part of it is justified, but I think those fears are overdone. I'll come back to that point a little later, but let me share a few slides here on my computer. So this one chart shows the performance of Boeing, the blue line, versus the S&P 500. The stock is up 18.9% over the past year. And as you could see here, it has had a very impressive run from the post-Christmas base. It's up almost 30%. It is closing currently at its 52-week high. So has had a very strong run, but the overall trend on the revisions front is still very strong. Let me show what's happening with estimate revisions. This is a chart similar to what Dave was sharing with us, but it's a I'm using the ZRS while he was using Zacks.com, and here you could see the top red line is 2020. This light blue is 2019. You see this big gap between these 2 years, and you see the upward slope both for 2020 as well as for 2019. So even though the stock has had a very impressive run-up, given this positive revisions trend that we are seeing with the company's business, I think it makes sense to overlook the momentum we have seen thus far and to expect that the trend will continue. I just want to briefly show a chart showing the stock's valuation picture too, for those who take valuation issues a lot more seriously. And what I'm trying to pull here is a 5-year chart that shows Boeing versus the S&P 500 on a forward 12-month EPS basis. So the stock is trading at around 19.5 times now, and as you could see, it has traded as high as close to 30 times. That was almost a year back. So one could even argue that the gap between this 19.5 times and the 30 times is perhaps this trade fear. And another takeaway from this could be that even though it has had a very amazing run, valuation is by no definition stretched. Operationally speaking, Boeing has a backlog that will keep it 100% busy producing planes over the next 5 years. The last quarterly release, its revenues, earnings, and cash flows were a record for the company's history. The pipeline of orders it has on its books already gives us a very high level of visibility into its results over the next few years. And just briefly on the trade issue, Terry, even if trade totally goes south, the negotiations that are going on right now, for competitive reasons, the airlines that have placed those orders don't really have anywhere else to go. It's not like a Chinese airline that is expecting delivery of 50 planes from Boeing next year can just cancel that order and go to Airbus to give me 50 planes. It just doesn't work that way. So it's this global duopoly. They both have this backlog of orders that completely keeps them occupied for the next many years. In Boeing's case, it's 5 years. I would say to even long-term folks who have a relatively valuation bent, that even though it has had a very good run, I think there's still a lot of positive potential for Boeing long run.
All right, do you own either of these two?
I have Boeing in the focus list portfolio.
Hey, Dave, aren't you happy you went first? Do you own either of these two?
I have SkyWest in Surprise Trader.
All right, thank you both for that. Don't forget, always more stock information is available to you on our website, Zacks.com. Get over to the homepage and check it out for yourself. With Shiraz and Dave, I'm Terry Ruffalo.